Let's get more on Facebook's quarter. Bring in fast money friend Loup Ventures Gene Munster. He's been manning the red phone, as you see there, listening in on the company's call. So, Gene, you went into this report neutral near term, neutral long term on Facebook. Does this quarter change your mind?
Well, I got to give them credit. I've been a long-term kind of conservative view on this story, part for just the philosophy of their business. But what they've shown in the near term is powerful. I think your team has properly enumerated that. I would point out that longer term, I do see there's a deja vu aspect to this related to Google, too, not only in the results and some of the commentary about the ad spending, but I think long-term investors should think about what are the types of businesses that can be trillion-dollar type of companies. And this, of course, is an advertising business. And when you ask the question, how do I feel longer term about this? I'm still neutral. I still believe that for those winners, this is now going to be a $600 billion market cap. To really be a $1 trillion, you have to change the world beyond what is going on in advertising. Yes, they have growth drivers around Messenger and WhatsApp that undoubtedly will boast the revenue growth. This is a solid business. Hats off to them in the near term. But I do see the language around investors and how they view this story longer term shifting to other ways that they can ultimately grow beyond just advertising.
How do you think about the commentary surrounding the most recent 3 weeks in April stabilizing, Gene? I mean, we were talking about this with Google in terms of how far in advance advertisers have to lock in whatever they're buying, and at what point do you say, you know what, people, if they are going to cancel, we're seeing it in the results?
Yeah, you can we did back into the numbers. So in Google's case, they went from up 20% to flat over the final 3 weeks. In Facebook's case, it was likely up 25% and then went down about 5 or 6% in those last 3 weeks of the quarter. And now, as you said, is stable. And so, yes, this did see an impact greater than what Google did, Facebook's business did. But this bounce back, as someone who is not a firm believer in their mission, this bounce back is impressive and have to give them credit for that. I just think that the central question for long-term investors should be, what is their encore? Messenger is probably not that. I do think one piece that Facebook can be transformative and really advance how humanity interacts is what they're doing around virtual reality and augmented reality. That, to me, is the big lever. That is something, as they progress, that I could get more optimistic about the story.
Karen, I'll bring you in and I'll pose that question to you, and you can also ask Gene about this, but in terms of what is their next encore? I mean, when you are a holder of Facebook, you have been for a while, and so how do you think about that?
Well, I think payments in what I'm not talking about Libra. I'm talking about they're getting in the middle of transactions. That is one area of growth. I will see how they monetize, WhatsApp and virtual reality that's been sort of a hope for a while now. I think since they bought Oculus, which I don't remember now how many years back that is. So that's not I don't see that in the very near term. But I guess what I think more about is, what kind of multiple should a company like this have in this kind of environment, instead of, and that being somewhat of a floor for them, as opposed to where's the next giant revenue growth going to be from?
Gene, quickly, you want to answer Karen?
Yeah, it's more about augmented reality. We've been looking down at our phones. The future, and Facebook talks about this, is figuring our heads up with glasses and augmented reality. That's the real fundamental piece here. And I think that for investors, ultimately the multiple is about what's on the come in the next few years. If you look at Google's lineup versus Apple and Facebook, it needs more than just WhatsApp and Messenger.
All right, Gene, we'll say goodbye for now. We'll talk to you about Tesla in a few minutes. Meantime, let's turn to Microsoft. That stock is popping after reporting an earnings beat. We get to Josh Lipton with the details. Josh.
So, Melissa, I checked in with a Microsoft bull, Kirk Materne over at Evercore ISI. I just wanted Kirk's quick take on the quarter. He says good quarter against high expectations. You know, it's commercial cloud revenue up 39%. The cloud business, in his words, marching forward. He does have questions about guidance here, given the uncertain IT spending environment. He also notes commercial bookings growth did decelerate from 30% to 12%. So he wants to know how much of that is COVID related. He's expecting to hear a wider than expected guidance range on the call. Just quickly through the segments, Melissa, revenue in productivity and business processes, $11.7 billion. That was better than expected. Revenue in intelligent cloud clocked in at $12.3 billion, also better than analysts have been looking for. Within that segment, the cloud service Azure saw revenue growth of 59%. Of course, that's where Microsoft goes head to head with Amazon's AWS. And revenue in more personal computing also beating forecasts at $11 billion, increasing 3%. Call kicks off at 5:30 Eastern. Melissa, back to you.
When you mentioned commercial bookings, Josh, does that include cloud?
So I'm not sure. I hope to get more color on the call there. I did think that was an interesting metric that Kirk pointed out, that it did decelerate. Obviously, bookings now is revenue downstream. So hoping to get more color on that from CFO Amy Hood on the call, which kicks off in about 15 minutes, Melissa.
All right, Josh, thanks. Josh Lipton. Pete Najarian, I go to you. You've been a longtime Microsoft fan.
Yep, I like this name, and I love what they just put up. I thought the quarter was really impressive. I think from everything across what Josh mentioned, a couple things he didn't mention. Teams. I look at Teams and the fact that they absolutely have gone right after Slack and others to compete in that market, and not only compete, but win in that market. I think that's really impressive. But on top of that, LinkedIn actually had another good quarter. So I think it's not just Azure, which was great, 59%. We know the attacks that they're going back and forth with AWS. AWS is still king. But Microsoft continues to move a little bit closer and a little bit closer from a market share perspective. And I think that's really important. Obviously, we'll hear more about Amazon in the future. But right now, I think you could not have presented much better of a quarter, given all of the backdrop of everything they were dealing with, supply chain, everything else, the personal computers. And let's not forget, they have a gaming presence as well, Mel. They're doing really well there as well. So across the board, I like what they did with Microsoft. This is a name that ran so fast into this number, and yet still, I think, got better than people ever would have expected, and that's why we're seeing the stock up as much as it is.
COVID has had a quote-unquote minimal impact on third quarter revenues, and I thought that was pretty extraordinary, Guy, until you really think about when CIOs greenlight deployments, right? I mean, they're not. I don't think that they're going to pull the ripcord on things that are mid-deployment during the quarter. I mean, the proof will be probably in this upcoming in the next couple of quarters.
And things that are essential. And then you look at it, and Pete spoke to it, but one thing he didn't mention was operating margins now approaching 69%, which is a pretty astronomical number. You know, the knock on Microsoft, correctly or incorrectly, has been valuation. Right now, it's probably trading close to 31 times. But, you know, if you make me play the game, would you rather Facebook or Microsoft, obviously two very different companies, you know, I'm more inclined to stay with Microsoft here. You know, this is one we actually did a good job with. We thought it would trade down to 140. It got down there. If you recall, that was sort of the level that we topped out last summer into the fall. Made a lot of sense. It's bounced from there. I think 191's the all-time high. You know, I think Facebook is going to fail at its all-time high, and I think there's a very good chance that Microsoft continues through it. So I thought it was a great quarter, and I think there's further upside for the name.
Amazon, by the way, not that Amazon is directly related to either of these names, is up 1 3/4%. But I bring that up, Tim, because we thought that there was this reversion trade out there, and now we've got MAGA, we've got the biggest names on the index, all tech names, posting better than expected earnings so far, and the other ones riding the coattails of the better than expected earnings. Do we go back to growth is it?
Pretty extraordinary, and you talked about the weighting of the S&P here, and so if you look at Microsoft and Facebook of the Nasdaq 100 are about 17%. So we already know what that's going to do tomorrow. So the outperformance, if you're playing it in ETF land, right? That's the triple Qs over the SPY. Yes. I mean, except for that today's trade for the market, and I know we're going to talk about this when we get to Gilead later in the show, but the impact on those stocks that were really shut down on a longer term, kind of quarantine dynamic for the economy and the country are the ones that are really flying high. So I think we are at difficult valuations for these mega cap tech stocks. I think we were 2 months ago. But I do think that the balance sheets that are very defensive, these two companies, I mean, Facebook has $60 billion of cash. They're spending $6 billion in India in the middle of a crisis because they can be aggressive here. So these are defensive stocks no matter what you want to say. But no, I don't think, I think the story right now for the market is that we are coming out of this faster if there are vaccine certainties, or at least the question of people getting back to work. That's so much better for the value trade right now than it is to me for mega cap tech.
But MAGA plus F, Karen, and I'll create a sub basket for you because certain stocks are just simply not in your wheelhouse in terms of possible investments. But Apple, Facebook, Alphabet, are you getting concerned about these sorts of valuations here?
I mean, I guess I'm concerned to the extent that the market's bounce back has been so sharp that, and these obviously have bounced back, they're not far at all from all-time highs, that creates a level of risk. However, if the market does pull back because we've gotten too excited about the V-shaped recovery, and it's not a V, it's some other letter, then I think they will outperform. Will they go down in that tape? Yes, they will, but they'll outperform some of the growthier ones, certainly than the airlines and the restaurants and the hotels.
Guy Adami, quickly, is this going to be a sell the news sort of event, or earnings being the news?
Could happen with Amazon. Oh, I apologize. Sorry, Mel. It could happen tomorrow with Amazon. So one thing I've said for the last couple of weeks, and I guarantee I'm going to get fricasseed for this if I'm wrong, because that's typically what happens. But I said you own Amazon into earnings tomorrow, probably make a new all-time high, then you pull the ripcord ahead. I do think there's a chance that Amazon, the one that, although earnings will be good, will disappoint in terms of stock performance. Think about the move that stock has had. It's rallied some 50-something% now off the low. I think there's a real good chance that you see Amazon trade back to the previous all-time high of 2170. So I think I'm sort of saying what Karen's saying. I think it will come in the form of Amazon earnings tomorrow.